Welcome back. You're watching Closing Trades right here on ET Now. If you look at the markets near the day's highest point at this point in time, but let's take a look at Nazara Tech because that particular counter is in focus in today's trading session. The company has announced open offer by Plutus and Exana Estates in order to acquire another 26% stake from the company, and the price is at around 990 rupees per share. We have Nitish Mittersain, who is a joint MD and CEO of Nazara Technology, joining us on the show right now. Thank you so much for joining us, Nitish, and help us understand about this entire open offer and what does it mean for the company.
Sure. Thank you for having me. So, the company has raised a preferential issue of INR 495 crores to aid its growth in organic and inorganic ways going forward. And as part of that transaction, the investors who are Arpit Khandelwal and Mr. Mithun Sacheti, through their entities, will hold 25% in the company, which triggers a mandatory open offer. So that is the announcement that has happened today.
Nitish, give me some more details on where the proceeds are going to be used for and what are the details of the preference issue?
So for us, as you know, we've been pretty acquisitive and we're seeing a lot of confidence and good performance of the companies we've acquired. So I think we're at a point where we think we can really scale this more actively. And therefore, most of the proceeds will go through relevant strategic acquisitions. We also announced a small asset purchase today of 2 games from Zeptolab, which we think is a very attractive transaction for us. So we think with this additional funds, we'll be able to drive further growth in 2025. And we continue to have a very healthy pipeline of opportunities to focus on.
Right. So like you spoke about the IP acquisition, I believe is about for 2 games from Zeptolabs, and also it's about 67 crore rupees or so. If you could give us more details on this, what sort of synergies would be there for Nazara Tech in this?
For a lot of the games that we're acquiring or the game studios that we're acquiring, we've created a center of excellence across strategic areas of inputs, which include user acquisition, it includes data analytics and artificial intelligence. So we're building strong domain expertise in these areas and then helping each of these games and gaming companies that we acquire to leverage these, IPs and opportunities to grow faster, improve their profitability. And that seems to be working well for us. So we kind of want to double down on it.
Interesting. What I wanted to understand, Nitish, was also, what is the update on the promoter stake and whether or not, there's a plan in place already for the continuity of the management. Because what I understand is because of this open offer triggered after the preferential announcement, the post-transaction stake would be about 27.2% for Axon Estates and Plutus Wealth, right?
That's right. So the existing promoters are going to continue to control the company, and the existing management, including me being the CEO, are very much going to continue doing what we do on an ongoing basis. Both Mr. Arpit Khandelwal and Mr. Mithun Sacheti will come in as deemed co-promoters and will add value to the company wherever possible.
So from the current 9%, you're not looking to dilute it any further, are you?
Not at this point.
Okay, fair point. Any other acquisitions that you may be looking at, considering, that's always been a strategy and you've always been scouting for newer assets?
I think a lot of our focus is on core gaming studios. The studio we acquired a few months back, Fusebox Studios, has done well for us, and we're looking for similar opportunities. We will build a pipeline this year and look at. We are not in a hurry, but if we get the right opportunity, we will definitely execute it.
Right. So keeping in mind the way the pipeline is looking like for the company, and you did say that you are having a healthy pipeline and you are also scouting for great opportunities. Are you on track to meet any of these revenue estimates that you have actually penciled in for the company, or are you expecting to better it going ahead, given the fact that now you will also have fund to go ahead and look at better opportunities going ahead?
So, earlier we've guided to the market that we will do at least 300 crores of EBITDA in FY27. And I believe we are firmly, in place to achieve that. Of course, our objective will always be to better it, But at this point, I can reiterate that we are firmly on track to meet our guidance.
Right, so firmly on track to meet your guidance. And what about FY26? How is it looking? How is it looking for you, actually, Nitish? Given the fact there's lots happening for the company.
We're feeling very positive and bullish about FY26 as well. We don't have specific numbers out for FY26, but I think you will definitely see an acceleration of growth both in revenue and profitability.
So you will see further acceleration in growth going ahead for the company, but all the very best for that, Nitish. Thank you so much for joining us and candidly answering the questions, especially when you talk about the open offer and also the acquisitions that the company has made when you talk about the IP acquisitions. Thank you so much for being part of the show at this point in time.